Hi, in this video, we will solve example sums for the issue of shares for consideration other than cash. So let's go on to the first example sum. Example sum 1. Tic Tac Limited purchased the business of Ram Brothers for rupees 1,80,000 payable in fully paid equity shares of rupees 10 each. We are asked to pass the journal entries in the books of Tic Tac Limited if the issue is case A at par and case B at a premium of 20%. So we'll begin with case A. In the books of Tic Tac Limited, journal, date, particulars, LF number, debit rupees, and credit rupees. The first journal entry is for the purchase of business of Ram Brothers. Sundry asset account debit to Ram Brothers account. The sundry asset which is purchased is 1,80,000 rupees, and the amount payable to Ram Brothers is also 1,80,000 rupees, being for the purchase of business of Ram Brothers. The second entry is for the issue of shares to Ram Brothers. The shares have been issued at par, so the journal entry Ram Brothers account debit with the amount which is payable to Ram Brothers, which is 1,80,000 rupees, to equity share capital account. Let's do the working notes. Number of shares issued to Ram Brothers is the amount which is payable, which in this case is 1,80,000 rupees, divided by the issue price per share. The face value of the share is rupees 10. In case A, the share has been issued at par, so the issue price is also rupees 10. Therefore, the number of shares is 18,000 equity shares. So against equity share capital, the number of shares multiplied by the face value per share, which is rupees 10, 1,80,000 rupees. And the narration, 18,000 equity shares of rupees 10 each issued at par for consideration other than cash. So this is the answer to the first case. Let's go on to case B. Case B, in the books of Tic Tac Limited, journal. We have date / serial number, particulars, LF number, debit rupees, and credit rupees. The first entry is for the purchase of business of Ram Brothers, sundry assets account debit, 1,80,000 rupees to Ram Brothers account, amount payable 1,80,000 rupees for purchase of business. Second entry is for the issue of shares to Ram Brothers, journal entry, Ram Brothers account debit with the amount which is payable to Ram Brothers, 1,80,000 rupees. 2. The share has been issued at a premium, so it's 2 equity share capital account and 2 securities premium reserve account. Let's do the working note to get the number of shares which have been issued. Number of shares issued to Ram Brothers is equal to the amount which is payable, which is 1,80,000 rupees, divided by the issue price of the share. The share has been issued at a premium of 20% on the face value of rupees 10. Therefore, the issue price is rupees 12. 15,000 equity shares issued against equity share capital. The amount is 15,000 shares multiplied by the face value per share, which is rupee 10, comes up to 1,50,000 rupees. And against security premium reserve, 50,000 shares multiplied by rupee 2, which is a premium per share, comes up to 30,000 rupees. Narration: 15,000 equity shares of rupees 10 each issued at rupees 2 premium for consideration other than cash. So this is the answer to case B. A small note: when shares have been issued at par and premium in the same sum, we can write a common journal entry as the first one: sundry assets account debit 1,80,000 to Ram Brothers account 1,80,000, and then write entries. The second entry separately for case A, issue of share at par, and separately for case B, issue of share at premium. Let's go to example 2. Example sum 2. 2,000 equity shares of rupees 10 each were issued to X Limited, from whom assets of rupees 25,000 were acquired. We are asked to pass the journal entry. Journal, date slash serial number, particulars, LF number, debit rupees and credit rupees. First journal entry is for purchase of assets worth 25,000 rupees from X Limited. Sundry assets account debit. Assets purchased 25,000 rupees to X Limited account. Amount payable 25,000 rupees. Purchase of assets from X Limited. The second journal entry, X Limited account debit. The amount payable to X Limited is 25,000 rupees. Now, it says that 2,000 equity shares of rupees 10 each are issued. The number of equity shares is already given. So, 2 equity share capital. The number of shares issued is given, which is 2,000 shares multiplied by rupee 10 per share is the face value, 20,000 rupees. We find that the total of the debit does not equal to the total of the credit, so the shares must have been issued at a premium. So I will credit securities premium reserve account with the amount of difference, which is equal to 5,000 rupees. And the working note to find out the premium per share is the total amount of securities premium, which is 5,000 rupees, divided by the number of equity shares issued, 2,000 equity shares, so it's rupees 2.50 per share, the premium. So it's 2,000 shares multiplied by rupees 2.50 per share. Narration: 2,000 equity shares of rupee 10 each issued at rupees 2.50 premium per share for consideration other than cash. So this is the answer to the second example sum. We'll move on to the third example sum. Example sum 3. Z Limited purchased furniture costing rupees 2,20,000 from CD Limited. The payment was to be made by issue of 9% preference shares of rupees 100 each at a premium of rupees 10 per share. Pass the necessary journal entries in the books of Z Limited. So let's go ahead with the solution. Solution: in the books of Z Limited journal, we have date / serial number, particulars, LF number, debit rupees and credit rupees. The first journal entry is for the purchase of furniture. Furniture account, debit. Furniture which has been purchased is 2,20,000 rupees. 2. The name of the vendor, CD Limited. Account. Amount payable to CD Limited, 2,20,000 rupees. Purchase of furniture from CD Limited. The second entry is for the issue of shares to CD Limited. CD Limited account, debit. The amount payable to CD Limited is 2,20,000 rupees. The shares which have been issued are 9% preference shares, and these shares have been issued at a premium of rupees 10 per share. So 9% preference share capital account. 2. Securities premium reserve account. Let's do the working notes for calculating the number of preference shares issued. Working notes, number of preference shares issued is equal to the amount payable to the vendor CD Limited, which is 2,20,000 rupees, divided by the issue price of the share. The share has a face value of rupees 100 and it has been issued at a premium of rupees 10 per share. Hence the issue price of the preference share is 110 rupees. So the number of shares issued is 2,000 preference shares. Against 9% preference share capital, we will write 2,000 shares multiplied by the face value, which is rupees 100, comes up to rupees 2 lakh. And again, security premium reserve, we'll write 2,000 shares multiplied by rupees 10, which is the premium per share, comes up to 20,000 rupees. The entry is for 2,000, 9% preference shares, of rupees 100 each, issued at a premium of rupees 10 per share for consideration other than cash. So this is the answer to the third example sum. We'll move on to the fourth example sum. Example sum 4. Sona Limited purchased machinery costing rupees 17 lakh from Mona Limited. Sona Limited paid 20% of the amount by check, and for the balance amount issued equity shares of rupees 100 each at a premium of 25%. Pass the necessary journal entries in the books of Sona Limited. Solution. In the books of Sona Limited, journal. we have date / serial number, particulars, LF number, debit rupees, and credit rupees. The first journal entry is for purchase of machinery from Mona Limited. Machinery account debit. The value of machinery purchased 17 lakh rupees to Mona Limited. Account amount payable to Mona Limited 17 lakh rupees. Narration purchase of machinery from Mona Limited. The second entry is for the settlement of amount due. Mona Limited account debit, amount payable to Mona Limited 17 lakh rupees to bank account. Says 20% of the amount was paid by check. So 20% of rupees 17 lakh comes up to 3,40,000 rupees. The balance is paid by issue of equity shares of 100 each, issued at a premium of 25%. So 2 equity share capital account, 2 securities premium reserve account. Let's do the working notes. First, we'll ascertain the amount which is to be paid by the issue of equity shares. Amount payable by issue of equity shares is equal to the total amount payable, which is rupees 17 lakh, minus the amount which has been paid by issue of check, which is 3,40,000 rupees, comes up to 13,60,000 rupees. Next, let's calculate the number of equity shares issued is equal to the amount which is payable by the issue of equity shares, which is 30,60,000 rupees, divided by the issue price of the equity share. The face value of the share is rupees 100, issued at a premium of 25%. Hence, the issue price is 125 rupees. I am dividing by 25. Dividing by 5 again. So we have 10,880 equity shares that are issued. Against equity share capital account, I will write 10,880 shares multiplied by rupees 100 per share, comes up to 10,88,000 rupees. And against security premium reserve, I will write 10,880 shares multiplied by rupees 25 premium per share. Comes up to 2,72,000 rupees. Narration: 20% paid by check and 10,880 shares of rupees 100 each issued at 25% premium for consideration other than cash. So this is the answer to the fourth example sum. Let's move on to the fifth example sum. Example sum 5. Bharat Lamp Limited issued 30,000 fully paid shares of rupees 100 each for the purchase of the following assets and liabilities from Sharma and Company. Plant rupees 7 lakh, land and building rupees 12 lakh, stock in trade rupees 9 lakh, and sundry creditors rupees 2 lakh. You are required to pass the necessary journal entries. Solution: in the books of Bharat Lamp Limited Journal, we have date/serial number, particulars, LF number, debit rupees and credit rupees. The first journal entry is for the purchase of assets and liabilities. We'll begin with the working notes. As per the question, the number of shares issued by Bharat Lamp Limited is 30,000 fully paid shares of rupees 100 each. Therefore, the purchase consideration is equal to 30,000 shares multiplied by rupees 100, the issue price, which is equal to rupees 30 lakh. Net assets taken over is equal to, the total of the assets taken over is plant rupees 7 lakh plus land and building rupees 12 lakh plus stock in trade 9 lakh. It comes up to 28 lakh minus the sundry liabilities taken over, which is sundry creditors of rupees 2 lakh, comes up to rupees 26 lakh. Since the amount of the purchase consideration is greater than the value of the net assets taken over, we need to debit goodwill account with 30 lakh minus 26 lakh, which is equal to rupees 4 lakh. So let's pass the first journal entry. Goodwill account debit 4 lakh rupees. Plant account debit 7 lakh rupees. Land and building account debit 12 lakh rupees. Stock in trade account debit 9 lakh rupees. 2. Sundry creditors account 2 lakh rupees. 2. The name of the vendor, which is Sharma and Company. Account for the amount of the purchase consideration, just 30 lakh rupees. Narration: assets and liabilities of Sharma and Company taken over. The next journal entry is the settlement of purchase consideration through issue of shares. Sharma and Company account debit the amount of purchase consideration that is payable, 30 lakh rupees. 2. Share capital account. The number of shares which are issued is 30,000 shares multiplied by rupees 100, which is the face value of each share. Total amount 30 lakh rupees. Narration: 30,000 shares of rupees 100 each issued at par for consideration other than cash. So this is the answer to the 5th example sum. We'll move on to the 6th example sum. Example sum 6. Sure Limited purchased a running business from Mrs. Rai Brothers for a sum of rupees 15 lakh, payable rupees 12 lakh in fully paid shares of rupees 10 each, and the balance through check. The assets and liabilities consist of the following: plant and machinery rupees 4 lakh, building rupees 4 lakh, sundry debtors rupees 3 lakh, stock rupees 4 lakh, cash rupees 3 lakh, and sundry creditors rupees 2 lakh. You are required to pass the necessary journal entries in the company's books. Solution: in the books of Sure Limited journal, we have date/serial number, particulars, LF number, debit rupees, and credit rupees. We'll begin with the working notes. As per the question, the amount of purchase consideration is equal to rupees 15 lakh the net assets taken over is equal to the total of the assets which are taken over, which is Plant and machinery rupees 4 lakh, plus building rupees 4 lakh, plus sundry debtors rupees 3 lakh, plus stock rupees 4 lakh, plus cash rupees 3 lakh, comes up to rupees 18 lakh, minus the liabilities taken over, which is rupees 2 lakh, equals rupees 16 lakh. The purchase consideration is less than the net assets taken over, so the amount to be credited to capital reserve account is equal to net assets taken over 16 lakh rupees minus purchase consideration rupees 15 lakh equals rupees 1 lakh. So let's pass the first journal entry, plant and machinery account debit. ₹4 lakh. Building account debit ₹4 lakh. Sundry debtors account debit ₹3 lakh. Stock account debit ₹4 lakh. Cash account debit ₹3 lakh. 2. Sundry creditors account ₹2 lakh. 2. The name of the vendor, Mrs. Rai Brothers. Account, the amount of purchase consideration 15 lakh rupees, and to capital reserve account ₹1 lakh. Narration, purchase of business of Mrs. Rai Brothers. The second journal entry, is for the payment of purchase consideration. Mrs. Rai Brothers account debit, the amount payable 15 lakh rupees. 2. It says rupees 12 lakh is paid in fully paid shares of rupees 10 each. So 2 share capital account number of shares 1,20,000 shares multiplied by rupee 10 per share, 12 lakh rupees, and balanced through check. So balance to bank account 3 lakh rupees. Narration, 1,20,000 shares of rupees 10 each issued for consideration other than cash, and rupees 3 lakh paid by check. To get the number of shares, we took the amount payable by issue of shares, which is 12 lakh rupees, divided by the issue price per share, issues at par. So issue price is equal to the face value, rupees 10. And we arrived at 1,20,000 shares. So this is the answer to the 6th example sum. We'll move on to the 7th example sum. Example sum 7. Sandesh Limited took over the assets of rupees 7 lakh and liabilities of rupees 2 lakh from Sanchar Limited for a purchase consideration of rupees 4,59,500. Rupees 8,500 were paid by accepting a draft in favor of Sanchar Limited after 3 months, and the balance was paid by issue of equity shares of rupees 10 each at a premium of 10% in favor of Sanchar Limited. We are asked to pass the necessary journal entries for the above transactions in the books of Sandesh Limited. Solution. In the books of Sandesh Limited, journal, we have date / serial number, particulars, LF number, debit rupees and credit rupees. Let's do the working notes first. Working notes. The purchase consideration. As per the problem, it's given as rupees 4,59,500, and the net assets taken over is equal to the total assets 7 lakh minus the liabilities of rupees 2 lakh comes up to rupees 5 lakh. The purchase consideration is less than the net assets which is taken over. Hence, the amount should be, difference amount should be credited to capital reserve account. So the amount credited to capital reserve account is equal to 5 lakh rupees minus 4,59,500 rupees. This comes up to rupees 40,500. Therefore, the first journal entry, sundry assets account debit, 7 lakh rupees, to sundry liabilities account, the liabilities taken over is rupees 2 lakh, to the name of the vendor, Sanchar Limited, and the amount of purchase consideration is rupees 4,59,500 rupees. And to capital reserve account, 40,500 rupees as per our working note for assets and liabilities of Sanchar Limited taken over. The next journal entry is for settlement of the purchase consideration. Sanchar Limited account debit. The amount payable 4,59,500 rupees. It says rupees 8,500 were paid by accepting a draft in favor of Sanchar Limited after 3 months. So it's two bills payable account. Rupees 8,500 rupees for the acceptance of the draft, and the balance is by issue of equity shares of rupees 10 each at a premium of 10%. So 2 equity share capital account and 2 securities premium reserve account. Let's find out the amount payable by issue of equity shares. Is equal to the total amount payable, which is 4,59,500, minus the amount which is paid by accepting a draft 8,500 rupees. Comes up to rupees 4,51,000 rupees. Number of equity shares issued is equal to the amount payable by issue of equity shares, which is 4,51,000 rupees, divided by the issue price of the equity share. The face value is rupees 10 and it's issued at a premium of 10%. Hence the issue price is rupees 11. So number of equity shares issued is 41,000 equity shares. Against equity share capital, 41,000 shares multiplied by the face value of rupees 10 per share comes up to 4,10,000 rupees. And against security premium reserve, 41,000 shares multiplied by rupee 1, which is the premium per share, is 41,000 rupees. Narration. Bills payable accepted for rupees 8,500 and 41,000 shares of rupees 10 each issued at a premium of rupee 1 for consideration other than cash. So this is the answer to the example sum 7. Let's go on to the 8th example sum. Example sum 8. Akshit Limited purchased machinery of rupees 4,30,000 from Perfect Machines Limited and paid as follows. A. Issued 10,000 equity shares of rupees 10 each at a premium of rupees 3. B. Issued an acceptance of rupees 1 lakh payable after 3 months. And C. Balanced by issuing a post-dated check of 2 months of rupees 2 lakh. Pass the journal entries in the books of Akshit Limited and Perfect Machines Limited. Solution. We'll begin with the journal entries in the books of Akshit Limited. In the books of Akshit Limited, journal, we have date/serial number, particulars, LF number, debit rupees, and credit rupees. The first journal entry is for the purchase of machinery of rupees 4,30,000 from Perfect Machines Limited. Machinery account debit 4,30,000 rupees to Perfect Machines Limited account. The amount payable to Perfect Machines is also rupees 4,30,000. Narration: purchase of machinery from Perfect Machines Limited. The second entry is for payment of purchase consideration of rupees 4,30,000 to Perfect Machines Limited. Perfect Machines Limited account debit. The amount payable 4,30,000 rupees to the equity shares are issued at a premium. So to equity share capital account, number of equity shares 10,000 shares multiplied by the face value of each share, which is rupees 10, comes up to rupees 1 lakh. To securities premium reserve, account 10,000 shares multiplied by rupee 3 per share is a premium, comes up to 30,000 rupees. It says in point B, issued an acceptance of rupees 1 lakh payable after 3 months. So that's two bills payable account. The amount of the acceptance is 1 lakh rupees. And finally, issuing a post-dated check of 2 months for rupees 2 lakh. So to bank account 2 lakh rupees. The narration: purchase consideration paid by issue of equity shares accepting bills payable and through issue of check. So these are the journal entries in the books of the purchaser, Akshit Limited. Let's move on to the journal entries in the books of Perfect Machines. In the books of Perfect Machines Limited journal, we have date/serial number, particulars, LF number, debit rupees, and credit rupees. The first entry is for making the sale. The sale is made to Akshit Limited. Akshit Limited account debit to sales account. The amount of goods sold 4,30,000 rupees. Sales made to Akshit Limited. The second entry is for the receipt of the sale consideration, sale amount of 4,30,000 rupees. Equity shares will be written as investments account. The total amount of investments 10,000 equity shares at rupees 13 is the issue price. So that's 1,30,000 rupees. Bills receivable account, debit amount 1 lakh rupees. Check in hand account, debit 2 lakh rupees. To debtor's name Akshit Limited account, totally 4,30,000 rupees. Narration amount received against sales made to Akshit Limited. So these are the journal entries in the books of Perfect Machines Limited. I'll remove the split we can view journal entries in the books of both the parties. This is the first part in the books of Akshit Limited. And this is the second part in the books of Perfect Machines Limited. This is the answer to the example 8. Let's go on to the example 9. Example sum 9. Light Lamps Limited issued 50,000 shares of rupees 10 each as fully paid to the promoters for their services to set up the company. It also issued 2,000 shares of rupees 10 each, credited as fully paid up to the underwriters of shares for their services. Journalize these transactions. Solution. In the books of Light Lamps Limited, journal. Date / serial number, particulars, LF number, debit rupees and credit rupees. The first part, it says Light Lamps Limited issued 50,000 shares of rupees 10 each as fully paid to the promoters for their services to set up the company. So we'll make the amount due incorporation expenses account debit to promoter account, amount due 50,000 multiplied by rupees 10, which is rupees 5 lakh. Amount due to promoters for their services. The second entry is for the issue of shares to the promoters. Promoters account debit, the amount payable to the promoters, 5 lakh rupees. The shares have been issued at par to share capital account. Number of shares issued 50,000. Shares multiplied by the face value rupees 10 per share, 5 lakh rupees. Issue of shares of rupees 10 each at par to promoters for services rendered. We'll deal with the next part of the question. It also issued 2,000 shares of rupees 10 each credited as fully paid to the underwriters of shares for their services. So the third entry, underwriting commission account debit to underwriter account, amount due to the underwriters 2,000 shares multiplied by rupee 10 each, 20,000 rupees for amount due to underwriters for their services. And the last journal entry is for issue of shares to the underwriters. Underwriters account debit, the amount payable 20,000 rupees to share capital account, 2,000 shares multiplied by the face value of rupees 10 per share, 20,000 rupees. Issue of 2,000 shares of rupee 10 each at par to underwriters for their services. So these are the answers to the 9th example sum.